Ever thought about jumping into the Indian stock market but felt, completely overwhelmed by all the financial jargon and endless digital paperwork? Well, you're in the exact right place. Today, I'm going to show you exactly how to buy your very first stock in 2026. We're going to go step by step, taking you from knowing absolutely nothing to confidently owning a piece of a real company.
Okay, let's dive into our Zero to Hero roadmap. We're going to cover 1. Stock market basics, 2. Setting up accounts, 3. Choosing a broker, 4. Buying your first stock, and 5. Avoiding beginner mistakes.
All right, Section 1, Stock Market Basics. Let's lay down the ground rules. So, why even do this? Why not just leave your savings sitting in a regular bank account? Well, today, in 2026, the Indian equity market has evolved into this incredibly advanced, highly regulated landscape. It's built for one primary purpose: structural, transparent growth.
Think about it. When you buy a stock, you're not just playing with a blinking ticker symbol on a screen. You are literally owning a small piece, a tiny fraction of a real-world business. If that company sells more stuff and makes a profit, your investment grows right along with it. It's a proven engine for long-term wealth creation. And honestly, it's how you beat inflation over time, ensuring your hard-earned cash doesn't just quietly lose its value year after year.
Moving right along to Section 2, Setting up your accounts. Let's talk demat and trading.
First up, you need a demat account. That stands for dematerialized account. Just think of this as a super secure digital vault. It's managed by central depositories like CDSL or NSDL. This vault is where your shares, mutual funds, and bonds sit safely in electronic form. But here's the kicker. This account only holds your assets. It doesn't actually execute any trades.
To actually buy and sell, you need a trading account. Think of this as your transactional engine. Provided by your stockbroker, this engine connects straight to your bank to fund your buys, and it talks to the stock exchange to execute your orders. You hit buy with your engine, and the shares go straight to your digital vault for safekeeping. And honestly, the best part, brokers today will open both of these for you at the exact same time. To get set up, you just need a few mandatory documents ready to roll. You'll need your PAN card, that's your primary tax ID. You'll need your Aadhaar card, and definitely make sure it's linked to your active mobile number for verification. Next, some proof of your bank account, like a downloaded digital statement or a quick photo of a canceled check. And lastly, just a clear photo of your signature on plain white paper. Having these ready on your phone makes the whole bureaucratic process an absolute breeze.
Guys, the 2026 onboarding system is just brilliantly fast. It is 100% paperless. You punch in your basic details, the system runs an automated digital KYC, and then you do a quick video KYC. Literally, it's a video call taking under 5 minutes where you just show your face and your PAN card. You link your bank, sign the form using an Aadhaar OTP, and boom, you're done. No mailing physical forms anywhere, your account is usually approved and fully active in just 24 to 48 hours.
Okay, Section 3, Choosing a broker. Time to pick your platform. Broadly speaking, India has two types of brokers. Full-service brokers, like ICICI Direct or HDFC Securities, give you research reports, dedicated advice, and physical branch support, but they usually charge higher percentage-based fees. On the flip side, you have discount brokers like Groww, Zerodha, and Angel One. These are incredibly popular for beginners. Why? Because they offer these wonderfully clean, uncluttered apps and charge very low flat fees. You're making your own investment decisions, but you save a massive amount on costs.
Speaking of costs, here is a crucial number you're going to love: 0. Under the latest Basic Services Demat Account or BSDA rules, if you're a beginner and the total value of the stocks in your account stays under 4 lakh rupees, your annual maintenance charge is absolutely 0. It literally costs you nothing just to hold your investments. And here's another key number to remember: 20 rupees. Even when you do pay fees on those discount brokers for executing a trade, it's typically capped at a maximum of just 20 rupees per order. Whether you're buying 5 shares or 500 shares, the transaction fee stays flat. Talk about beginner-friendly, right?
Section 4, Buying your first stock. It is time to actually execute a purchase.
Now, what's really interesting here is the ultra-fast speed of the Indian market right now. When you buy a stock, it goes through a settlement process. The standard is T+1. That means if you buy on Monday, the shares officially hit your demat vault on Tuesday. But in 2026, we have this amazing optional T+0 settlement for the top 500 largest stocks. You can literally opt for same-day delivery by around 4:30 p.m. It completely wipes out overnight waiting risks and gives you incredible liquidity.
Let's walk through exactly how this looks on your app. Step 1, you transfer funds securely from your linked bank account. Step 2, you use the search bar to find a company you've done your research on.
Step 3, punch in the exact quantity of shares you want to buy. Step 4, choose your order type. And Step 5, simply swipe or click to confirm. That's it. Let me just quickly clarify that fourth step for you, because we want to keep this totally free of complex jargon. You really only need to know 2 order types as a beginner. A market order basically tells the app, hey, buy this stock immediately at whatever the best available price is right now. A limit order, on the other hand, gives you a bit more control. You're saying, I only want to buy this stock if the price drops to a very specific target number that I choose. Finally, Section 5, avoiding beginner mistakes. Let's put up some financial guardrails. I really need you to pay close attention to this data point. It comes straight from SEBI, India's market regulator. 9 out of 10 individual traders in the equity, futures, and options segment incurred net losses. Futures and options, or F&O, are highly speculative, leveraged derivatives. Seriously, as a beginner, I strongly advise you to completely avoid the F&O segment. Do not try to day trade derivatives. Just stick to simple cash equity delivery. That just means buying and holding real stocks. So let's lock in those golden safety rules. Avoid F&O. Please, do not chase random hot tips floating around WhatsApp groups or getting hyped up by YouTube influencers. Never invest your money without doing your own research into what the company actually does and if it makes a profit. Don't panic sell when the market has a bad day. Think long term. Oh, and one more strict 2026 mandate. You absolutely must add a nominee to any new single holder account. This ensures your investments securely pass to your family if anything happens to you. Seriously, do it immediately during sign-up. And there you have it, your entire zero to hero journey. Look how simple and safe it is to start. You open your paperless demat and trading accounts, you securely add your funds, you take a little time to research a company you genuinely believe in, you buy your first share. And then, the ultimate secret of the stock market? You don't panic over daily price jumps. You just invest consistently for the long term. You've now got the exact roadmap, the tools, and the guardrails to enter the Indian stock market in 2026. The system is highly accessible, remarkably secure, and incredibly fast. The only thing left? Taking that very first step today. So I'll leave you with this one question. What will your first stock be?